I just made $293,703 in the last 30 days using this crypto trading strategy that most people would call boring. They'd consider it boring because it doesn't require you to have a crazy amount of charts open, and you don't need to trade every single pump, and it cuts out all of the noise, avoiding all of the chaos that causes 90% of traders to lose money. And it's not just me who's had results like this. Kaizen flipped 1K into 100K in 4 months. Rubik's made 50K in his first week, and Novello went from in debt to 6 figures in under 6 months. So in this video, I'm going to be breaking down what this strategy is and how you can use it for yourself. Let's get into it. So there are 2 parts to this strategy. The first part I'm going to cover in this first half. The second part I'm going to cover in the second half of this video. So stay tuned for the second part. This strategy is called the flipping strategy, and it's great for flipping an account in a bull run. And what you need to pick is coins that are on narrative. What this means is that coins that fit into a trending hype story right now. For example, we have seen coins like AI, meme coins, and in previous bull runs, DeFi do very well. And this is how you spot narratives emerging and coming forward. What people post on Twitter, this is what everyone is posting about. This isn't just, oh, I've seen one person post about it, I must buy it. This is a common trending narrative. And what you'll find here is that one coin performs very well and pumps more than the rest of the coins, and this will be the coin emerging from the rest of them. For example, at the beginning of the bull run, what we saw was Pepe run hard. This was the catalyst of all of the meme coins starting to run. Then you saw coins like Whiff run, and then you saw smaller ones such as Popcat, and then all of the others, etc., etc. But while this happens, there is a particular chain that is pumping. What do I mean by chain? Well, that means layer 1. What is a layer 1? That is coins like Solana, Ethereum, and many other layer 1 coins that have their own blockchain. Now, ETH and Solana are the best performing ones. So when Solana pumps, that is when we look to long Solana meme coins. Because what happens is that Solana pumps, then that money filters down into the ecosystem, and then the smaller caps pump from there. There may be some VC funding in this area, but however, meme coins were kind of counterintuitive to VC funding, and it was more of a FU to them, because what happened was that VCs were buying up the supply of tokens really early and then dumping on retail investors. The main point here is that you need to look for liquidity and belief. I'm going to cover liquidity shortly, but what belief is a belief that this narrative is bigger than anything else before. For example, DeFi. DeFi was a narrative that people believed was going to flip the central banking system. Meme coins are something that people believe in, and it's all about community, and you must hold until it flips 100x. So what you need to look for is liquidity and belief in order to flip an account. And for safer plays, just target the leaders in the narrative. And what do I mean by safer plays? Well, that means your Pepes, your Whiffs, and things like that. And obviously, I'm not meaning Pepe and Whiff, but those leaders in that narrative. Now, in order to flip an account, you only need to do it 10 times, right? To turn $1,000 into $1 million, you can do this by doubling it repeatedly by 10 times. The first time, 1,000 to 2,000, 2,000 to 4,000, 4,000 to 8,000, 8,000 to 16,000, 16 to 32, and so on and so forth until you get to 512 to $1 million. Now, you may not go all this way. For example, you may not need 10 flips. If you're starting with, say, $10,000 or $20,000, you can already see that you're already starting with a head start than somebody with $1,000. And then, in order to achieve $250,000, you only need 1, 2, 3, 4. Around 3 or 4, which you don't need 100x plays. You just need 10 good flips in a row. Is it hard? Yes, it is. But is it impossible? No, it is not. But if you implement risk management, which I'm going to cover later on in this video, then your chances of success increase. For example, on this 10th flip here, you may have $512,000. You're not risking that full amount on one position. You can significantly reduce your risk here in order to still double your account to make that $1 million. And that's the strategy that I'm going to be teaching you later on. But I mentioned liquidity. And liquidity is just volume. And if you can't sell fast in a token, it's not worth touching. Because if you cannot get in and out with a large position size, then you're not going to be able to flip an account. And why does this matter? Because high volume equals real interest in the project. And if there isn't any volume at all, then you're likely going to just be stuck holding the bag because you cannot sell, because there is nobody on the other end of that token to buy when you sell. That's why volume is important, because it is constant buyers and sellers at one price. And something that is usually good is a volume in comparison to the market cap. Now, if the market cap is extremely high, let's say billions, then it's going to become a less percentage, because obviously it's more volume, more money traded in and out, and that's why the tokens move really slow. However, if it's a smaller market cap, let's say if it's between, say, $1 million to $50 million, then a very, very good amount is 20% from the volume to the market cap ratio. So let's say it's $1 million market cap, then 200,000 is good in volume, because if it's $1 million market cap and the volume is, say, 10 to 20%, that's probably good for this level. $100,000 to $200,000 of worth of volume, then that means this coin is being traded at a small market cap. Now, this is on-chain trading versus centralized exchange trading. On-chain, the pros here are early access before it gets to the centralized exchanges. That means you get those big multiples, which is what I'm going to cover in the second half of this video. You also don't have to KYC, don't have to put in your information, your driving license, etc., or your name, and you get full control on a decentralized exchange. However, the cons are you can get rugged, there's a lot of scams, there's gas fees, there's slippage, and there is lower liquidity than on centralized exchanges. And then the pros for trading on a centralized exchange is high liquidity, because you have to put up money for a pool, and then a market maker will set bids and asks, so you can trade very, very smoothly. And this is ideal for bigger traders with a lot more money. And if you want to trade leverage, you can. And it's good for swing setups, because you can continue to hold on there. And it has extremely beginner-friendly user interface. Now, the cons are KYC and obviously surveillance. The exchanges can watch you if you have large position sizes, and you are usually later to trends once the coins are on exchanges. For example, this bull run, meme coins have performed very well on decentralized exchanges, but the second they get on centralized exchanges, they don't do so well. So what the centralized exchange play is for is to look for these safer 2x plays. And on the centralized exchange, as you can see, this is where you're going to find most of the 2x coins. So what is this strategy? This $250,000 month strategy. This is a coin that I called earlier in the month. I called Bonk before it did a 2x. Now, these take profits were adjustable. As I said, I expected price to go up here, and I'm going to cover this on the chart very, very shortly. And I said longs in this region, it comes down, gets back above, that's where you want to long. Or you can long in that region. And these were many of the 2x's that I just called last month. I called Bonk, I called Popcat, I called Aave, I called Solana, and I called Hype. So 5 2x's just in this last month. And imagine this. Let's say you started already with $5,000, and let's say you took 2 or 3 of them. Then that means that you're here. 1, 2, 3 at $32,000. So as you can see how extremely powerful this system is, if you just simply look for 2x's. Because how many times have you seen a token just do a 2x and then it reverses? It happens quite often. And finding a 2x in crypto is actually easier than you think. And this is the 2x strategy, which I'm going to show you on Bonk very shortly, that allowed me to make $250,000. The coin has had a large correction of 50% plus. The coin is on narrative, i.e. it's a meme coin. And then we fall into a key support area. Those are the 3 categories or 3 conditions that I look for in order to execute this super simple crypto strategy. And then you can add some risk management. If support doesn't support price, then cut the trade. Because the idea here, the coin is on narrative, so it is more likely to pump. And then we have come into a key support area, which means that we can manage our risk and make a lot more money. As you can see here, this was the exact Bonk trade that I took. If we zoom in, this was the area here that I told everyone inside my inner circle where to buy Bonk. And then I also gave an area to cut your trade to, which was here, this position. It was actually at 770 on the Discord. So as you can see, this was the buy zone. So we were doing our buying in Bonk here. Now you even got a breakout retest of this area here, and you could even do your buying in this area here. However, what happened with price? Let's zoom out. Price was down over 80%, right? So over 50% down into a key support area. As you can see, this was the last support left on this chart here. So as you can see, support, support, support. We found support here. Then what happened was we had one little rally here. We took the stops out. Then once we got back above this was my area to go long. As I told everyone, buy in this zone, cut on a clean break below of this support level. Because if this support level broke, then therefore my idea on this trade was invalidated. So as I was saying, buy in this box here, cut on a clean break below, and then have your targets up into here and then into this area here, which led to over a 144% gain on Bonk. So that is a 1.5x on your investment. Now, the reason why this strategy is boring to some people is because you need to be patient in between setups. Now, a 2x isn't going to come along every single day, especially if you're going to start putting $100,000 in, $50,000, $20,000. You don't need to be trading every single day. But if you have at least one a month in the bull run, then you are going to make a lot of money. And this is the thing. You do not need to trade every day, which gives you a lot of free time to do what you want, when you want. And this avoids over trading, because what a lot of people do is they come into crypto and they start to try to take trades here, try to make a lot of money and force things when they shouldn't be trading at all. So what you need to do is pick the right coins at the right time, and then you do this by filtering with high conviction setups only. Like the one I just mentioned there on Bonk. I also took Aave, Solana, Popcat, and Hype. That was all just last month. So if you want to find the next 2x coins that I'm looking, then you need to check the description below and you can work with me one-on-one. And this is the mindset that you need. You need to be working with an amount of money that you are not going to be devastated in losing. For example, if you start with $1,000 and you lose $1,000, it's not that bad because you can make $1,000 back working a job. However, if you are trading with $500,000, that is a lot more money, and it is more devastating if that money is going to be lost. So at the start, you need to work with an amount of money that you are not afraid of losing. Therefore, you go into these setups with no expectations, and when you have no expectations, you can execute your trades perfectly. Okay, so that was the first part of my strategy, and the second part is the 100x swing trading or holding narrative strategy. And this is great for when you either have a small amount of capital but don't want to do too much, or you already have capital that's built up over time, and then you want to create another pot on the side. Now, what you need to understand is the herd of people, because the markets are not driven by logic. They are all driven by emotion. Narratives only work if the crowd of people believes in them, because you're not trading fundamentals here. All you're doing is trading people's emotions. For example, meme coins are running this cycle. However, meme coins have no intrinsic value, and at the end of the day, companies on the stock exchange produce dividends for their holders, whereas meme coins produce nothing but hype and massive multipliers. But these massive multipliers are only because other coins in the past have pumped really hard, so therefore it is now a meme coin goldmine, for example. So price is the leading factor in narrative. If price is going up, that is exactly what the narrative is. And this is why trading cannot be replaced by artificial intelligence, because everything is all emotional. The markets are an extremely irrational place. However, a game like chess, there is exact strategies that you can repeat time and time again, and therefore you can code a bot or an artificial intelligence robot to play chess against someone, and that means that you would instantly lose. Even the best chess players in the world will lose against this bot. So what you need to do in order to spot these narratives early is watch the crowd for disbelief, because this is when it is the best time to buy. For example, meme coins again. When Pepe started running, everyone was saying, this is the cycle top. Oh no, meme coins are running again. They shouldn't be. This is what happens always at the end of the cycle. But that couldn't be further from the truth. That was actually the beginning of the cycle and the catalyst for all of the meme coins afterwards. Then, when the entire herd turns euphoric and everyone is agreeing with you, saying this is the next best thing since sliced bread, then that is your signal to start exiting. Fear usually forms bottoms and greed usually forms tops. Now, what is this narrative selection and how to pick 100x coins, right? So system number one, as I mentioned earlier, the 2x flipping system, it is a high market cap already, and this is price action focused predominantly. Now, system number two is where you find low cap coins and that you anticipate that they are going to be a higher market cap on a much longer time frame. Because lots of coins pump and dump. They rise, they go up, and then they fall. But the ones that you need to hold for a longer time has staying power. What do I mean by staying power? Well, this means that a coin is evergreen. For example, Doge is evergreen, but that one's already ran. What you need to identify is coins that have a potential to stay in the future and is going to be evergreen. For example, when I picked FET before it did a 15x, that was a coin that had a different use case. Then they started to pivot to AI. And then what happens once they pivoted their use case to AI, that is when they had a massive pump. And this also is when a coin believes it has a bigger image and is better than what is already on the market. And how do you identify this? Well, what is on the market currently and is a small market cap coin doing better than something that is 100x more, but then obviously that coin belongs at a higher market cap than that coin previously. And as I said, AI and meme coins have been the current narratives so far. And when do I think they will run again? Well, you can look at the Bitcoin dominance chart. When the Bitcoin dominance chart goes down, this is when altcoins outperform Bitcoin by 10-fold. Now, I think when this chart goes down eventually, it won't mean that all of the altcoins in this market is going to pump. Only a select few in a select few narratives will run. And as I said, AI and meme coins are the strongest ones currently. And currently, this is the resistance area. If we head up here, then this is the time that you would want to be looking to pivot into those coins. And memes and tech are extremely different because memes have no use case, they are fast, they are viral, and they have a lot of high upside. Now, the risk to these is there is a lot of rug pulls and that they have a short lifespan. For example, they pump up and they come down just as fast. However, tech, most of the time, is a slow grind up and then maybe it gets that potential pop off. And they do have a lot longer term potential because the meme coin environment so far now has become very rotational. And what do I mean by rotational? It means that people rotate their capital from one coin to the other very, very quickly. Whereas tech, people buy it and hold it for the longer term, which means it is a slow grind and it is harder to hype. However, you don't have to rotate your capital as much as meme coins. And then how do you identify when the narrative has finished? Because narratives do finish and they don't stay around forever. And so this is how you sell the top of them. Price has done its thing, accumulated, it pops off, and then it starts to lose momentum and then drop off. And a blow off top is simply that there is no support left. As you can see, this is forming a support level on the way up, and then in between here and here, there is no support. So the move up is just as fast as the move down. Look at Peanut, for example. As you can see, we're grinding up, boom, 3 days. It went from $100 million market cap all the way up to 2.5 billion. Then, once it broke down, it was a very, very quick and short, fast fall on the way down. There was really no support on the way down either. You could argue that this was support here, this was support here, but eventually it made its way all the way back down into this area here, back into $150 million market cap. So that's how you sell the top. And then engagement dies off, volume goes dry, and then there is a brand new narrative that feels a lot more fresh because humans like to buy new things. Humans always buy the flashy new car that comes out. They always buy the brand new iPhone that comes out every single year. And people do the exact same with coins. When a brand new narrative comes out, people want to go to it. They don't want to stay in the old stuff. But most people fail to identify before something new becomes popular. And over these years, I have called so many longer term holds. For example, I called Meatsheet, which did a 4x, Mog did a 7x, Popcat did a 10x, FET did a 15x, Solana 20x. I called the exact bottom at around $12 to $16, and Pepe did a 40x, plus many, many more. So when you want to exit these coins, you need to look on the higher time frame. When to buy, and you accumulate when price is low. Price is low, you buy here. Then when it breaks out, you hold through all of the volatility. It may go up 20%, it may go down 30%. Then once it rises again, then where do you sell? Where do you sell? How do you make money on these coins? Because a lot of people buy a coin and they never sell, and then they round trip all of their profits all of the way down. So when you buy, you can set predetermined levels. Let's say you want to sell at a 5x, you sell at a 5x, then you just sell the rest at a 10x. Or you just slowly scale out as price moves up. Or a third option, you can sell when there is maximum hype. What do I mean by this? Everyone is talking about the coin on things like Twitter, in real life, etc., etc. Therefore, there is less new people to buy the coin, and therefore it comes crashing on back down. Now, the reason why I say to sell at predetermined levels is because you can get in and you can get out. However, the problem arises is when people sell, let's say at 5x. You bought down here, you sell it all at 5x, and then it keeps pumping for another 10x. So that means you just missed out on a 50x. So then you start doing all of the calculations saying, oh, if I put in $1,000, I would have $50,000, but I only have 5. So what you end up doing is then you end up buying the coin back at the top. And then what happens then is that price comes crashing on down, and then you give back all of your profits that you have just made. So what you need to do is, if you sell at predetermined levels, sell and forget about the coin. So what coins am I looking for next? Well, I'm going to be posting all of my trades and all of the coins that I'm buying inside my 7-figure Inner Circle mastermind. So if you want to buy the exact same tokens and take the exact same trades as I'm going to be taking this bull run, then you need to join my 7-figure Inner Circle. Because inside, my aim is to make every single crypto investor that joins as close to 7 figures as I possibly can. And so far this bull run, I've already helped 5 crypto investors become verified millionaires, as you can see on the screen right now. Some of them have been able to buy brand new BMWs within 3 months. Novello here bought a brand new Rolex and went from in debt, didn't even know what a candlestick was, to making over 6 figures in profits within 6 months. And Jigsaw here in his first month made over $50,000 in profits. So if you would like to join them, check the description below and you can work with me one-on-one. And we're only just getting started this bull run. Everyone inside will continue to get rich while this bull run still lasts, because it won't last forever, so you have to act fast. And you can visit the description below to find out more and see even more success stories that we have created. That's all for this video. I hope you have found great value out of this.